Welcome to another enthralling episode on our channel. Today, we're venturing deep into the heart of the Eurozone, focusing on the European Central Bank, or as we affectionately call it, the ECB. Fasten your seatbelts and prepare for a captivating journey through the realms of monetary policy, economic growth, and the myriad challenges faced by this immensely crucial institution. Believe us when we say that it's far more riveting than it sounds. To truly grasp the essence of the ECB, it's vital to recognize what distinguishes it from other banks. You see, the ECB serves as the central monetary authority for the Eurozone, encompassing 19 European Union countries that have adopted the euro as their official currency. Unlike your neighborhood bank, the ECB's primary mission is to ensure the stability and growth of the entire Eurozone economy. Talk about a monumental task. Let's delve a little deeper into the ECB's main responsibilities. It shoulders two colossal roles, maintaining price stability and ensuring financial stability. In simpler terms, it's all about keeping inflation in check and safeguarding the financial system from collapse. Doesn't it sound like a superhero bank? So, how exactly does the ECB swoop in to save the day? It employs an array of monetary policy instruments to influence interest rates and inflation, thereby accomplishing its superhero objectives. Here are the top 3 secret weapons in the ECB's formidable arsenal. The first tool used by the ECB is the establishment of key interest rates for the Eurozone, which affect borrowing costs for banks, businesses, and consumers. Lower rates stimulate spending and investment, whereas higher rates temper an overheating economy. The second tool is termed open market operations. The ECB purchases and sells securities, such as government bonds, to regulate the amount of money in circulation. If it wishes to invigorate the economy, it acquires more bonds, increasing the money supply. Conversely, when it's time to hit the brakes, it offloads those bonds, shrinking the money supply. Lastly, the third entails the adjustment of the reserve requirements. Eurozone banks are obligated to hold a specified amount of reserves with the ECB. By modifying these reserve requirements, the ECB can control the amount of money banks have at their disposal for lending, which in turn affects the overall money supply. With these potent tools at its disposal, the ECB can profoundly impact the economy. But what are the real-life consequences of these policies? We've examined how the ECB employs its monetary policy instruments to influence interest rates and inflation. But how do these policies affect ordinary people like you and me? We can break it down into 3 primary areas: employment, investment, and financial stability. Employment. By maintaining low interest rates, the ECB encourages businesses to borrow money and expand their operations. This, in turn, generates more job opportunities for individuals like us. However, if the ECB sustains low rates for an extended period, it can result in inflation, diminishing the value of our hard-earned euros. Striking the right balance is a delicate act. Investment. The ECB's policies significantly impact investment as well. When interest rates are low, companies are more inclined to invest in new projects since borrowing money is more affordable. This can lead to innovation and economic growth. On the other hand, when rates are high, businesses may postpone investments, potentially stalling the economy. Once again, it's all about identifying that sweet spot. Financial stability. The ECB functions as the Eurozone's financial guardian, ensuring that the banking system remains stable and secure. By monitoring banks' reserve requirements and conducting stress tests, the ECB can avert financial crises, protecting our savings and investments. Now that we've witnessed the ECB's powers in action, it's time to explore some of the challenges this institution faces. Being a superhero isn't always. Now that we've witnessed the ECB's powers in action, it's time to explore some of the challenges this institution faces. Being a superhero isn't always a walk in the park, is it? Like any superhero, the ECB must confront a host of challenges. Let's delve into 3 of the most significant obstacles it must overcome. The first challenge is akin to walking a tightrope, balancing the needs of different member states. Each country in the Eurozone has its own unique economic situation, and the ECB must find a way to accommodate all of them. It's like trying to pick a movie that pleases everyone in a diverse group of friends, not an easy task, indeed. Contending with inflationary pressures is another substantial challenge for the ECB. Remember, one of its primary objectives is to maintain price stability. However, external factors, such as rising oil prices or global economic shifts, can cause inflation to surge. In these situations, the ECB must act swiftly to prevent runaway inflation from eroding our purchasing power. Finally, navigating the intricacies of the European Union's economic framework can feel like attempting to solve a Rubik's Cube while blindfolded. The ECB has to operate within an extensive network of rules, regulations, and political considerations, making its job even more complicated. But, as the saying goes, with great power comes great responsibility. So, there you have it, folks. The European Central Bank may not don a cape or boast a cool superhero moniker, but it plays an indispensable role in keeping the Eurozone economy stable and growing. We hope you've enjoyed this exhilarating adventure through the world of the ECB, monetary policy, and the challenges faced by this influential institution. Remember to smash that like button and subscribe to our channel for more engaging content. Until next time, stay curious and keep exploring.